Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a breakdown of the action in today's session, where we saw nice gains across the board. But Justin, this is a market that has a lot to prove.
Yeah, exactly. So it's not enough to just have one day of strength. I mean, it's nice that we followed up on Friday's reversal. So we'll get into that, and we'll also talk about a few stocks such as JPMorgan, which was a big mover today. Also, Albemarle and Valeris in the oil and gas industry.
All right, analysis on those three stocks coming up. But first, let's take a look at the major indexes. So the Nasdaq today with a strong gain up 1.6%, but even stronger, the S&P 500 up 1.9%, even stronger still. The Dow up almost 2%. The Russell 2000 lagging today a little bit, up just 0.8%. So we are now in a new rally attempt, but still a little ways to go.
Yeah, and this started with Ed and I had a pretty long conversation on the stock market today while you were gone, Ali. We went long, and one of the things we were talking about is okay, here we are, here we are. Rally was dead because we undercut the previous rally low on Friday, but we got a new rally attempt. So that became a pink rally day, and so now what do? Well, we start counting. So Friday was day one. This is day two. Nice to see that we got a follow-up on Friday's reversal off the lows, but look at the NASDAQ. I mean, it got close, but this was still an inside day. We didn't even surpass Friday's high. Much better looking on the Dow Jones Industrial Average. Very strong there, and it was an even stronger reversal, led by a lot of the stocks that have been beaten down. I mean, you had a lot of the financial stocks. We'll talk about JPMorgan, which is a Dow component. Also American Express, Visa, those were also up significantly. And then the S&P 500 also doing well. But remember, one of the things that's kind of driving these is the oil and gas. A lot of financials in S&P 500 as well. So it has a little bit of an edge over the NASDAQ composite with the tech. Now, there has been a little bit more bottom fishing. One thing that we keep on noting on IBD Live is if you look at ARKK, which, again, this has been a devastated ETF, but one of the things that was interesting about last week's action was how tight it was trading relatively. I mean, granted, these are 4% moves up and down, but relatively tight, and that while the indexes were making new lows, ARK, which is got a lot of speculative stocks in there, was actually holding up pretty well.
So that is something interesting to note as we continue to screen for stocks to add to our watch list and see which ones are kind of bubbling up to the surface, repairing some of the damage, or working on their base patterns, tightening up, working on that relative strength. But one question on the market before we move on here, Justin. So we are on day two of this rally attempt. As you said, we are awaiting a potential signal in a follow-through day, a so-called confirmation of this rally attempt. We got one not too long ago that didn't pan out. So it seems that, on the one hand, we need to remain open-minded, but on the other hand, we have to remain flexible as well.
Absolutely. And you got to be prepared for multiple scenarios. And I think you used a word that's very key here. The indexes really have to repair some damage. A lot of these charts are severely broken, and that doesn't get fixed that quickly. Yes, sometimes you do have these V-shaped corrections. The COVID crash was a good example of that. You came down very hard, but you also rebounded very quickly. That is a little bit unusual, and certainly the level of destruction that we've seen this time in terms of its persistence is a little bit different. This usually does take a little bit more time to recover. And just going back to the NASDAQ daily, you take a look at that, and now we've kind of tested a little bit, that just above 11,000. We've gotten just above 11,000, tested that a couple times. We're hitting our head on 12,000. We could go back and forth here for a little while, and that would actually not necessarily be a bad thing because it might allow some of these bases to finish forming. But a lot of the stocks that were those big high flyers of 2020 don't necessarily expect them to lead again. In our studies, only about 12.5% of former leaders come back to lead in the next market cycle. So it's quite possible that we're going to see a whole crop of new leadership, just like we've been seeing, lately what's been driving things is the cyclical and commodity stocks like the oil and
Yes.
gas.
Exactly. And like you said, if only 12.5% of former leaders come back in the next cycle, that's why we have sell rules. That's why we don't use hold and hope as a strategy. You went over this morning the 1929 crash and how that unfolded, and a great example there of the dangers of trying to call an ultimate bottom and being open-minded to any scenarios. And what helps with that is having rules in place that protect you.
Yeah, absolutely. And it's also, don't feel like you have to make all or nothing bets. This is one of those cases where I think it makes a lot of sense to do your pilot positions, do smaller positions, and then once the market says, hey, your decisions are working out, then you can dole more money out. But the last thing you want to do is plunge in too quickly just because we have a follow-through day. You want to have the stocks, the individual stocks working as well. You want to have some time behind you where your decisions are being proven. You're getting that market feedback. And then once you have those elements kind of working together, that's where you can start getting more and more aggressive. And look, the fact is, when these markets come down as hard as they have, your rebounds tend to be very powerful as well. So there is an opportunity right around the corner. Just don't be too eager to be thinking that you have to be first on it. Sometimes it's better to be a little bit late than too early and losing some of that mental capital as you keep on getting shaken out. So again, just go slow.
Yeah. Great reminders there, Justin. All right, moving on. A quick look at the 10-year Treasury yield, DRT index here on MarketSmith. Off a little bit in general, this most recent trend, but up again today. So the trend here very much still is up, Justin.
Yeah, I mean, it's still this. I mean, this was such a phenomenal move on the 10-year Treasury yield. It's not out of the realm of possibility or even what's normal to have this little pullback that we've seen. This is not bad considering the move. You're still retaining a good portion of that phenomenal move. So this looks very normal. You could expect it to maybe go back and forth a little bit, but I don't think the 3% level is something we've seen the last of. More than likely, we're going to get back up there again.
All right, keeping tabs on that. And also, let's take a look at some of the groups that were notable movers today. So XLF, we'll take a look at JPMorgan, as you mentioned. The XLF ETF, the sector fund, up about 3.25% today. Also taking a look at XLE, up 2.7%, and XLP, consumer staples here, up over 2% after a big hit last week.
Yeah, so just a couple things. So on XLF, you look at that chart and you compare that to XLE, and these are very different charts, right? So XLF might have been, the financials might have been very strong today, but these were charts that were really decimated. Most of these stocks are below their 200-day lines. The ones that were the strongest today, again, some of the most beaten down stocks really don't look that great. So yes, you're getting a bounce, but don't necessarily think, okay, this has got to be the bottom, because sometimes what we see is these rallies up into the moving average lines, and then it rolls over. XLE still looks a lot stronger, and XLP, I wanted to bring that up again, just as a reminder. Look, a lot of people look at the consumer staples as that safe spot. When the indexes aren't, doing well, hey, you can at least count on these to not lose you money. And I think last week showed you that's not necessarily the case. So you always have to treat the stocks. Any stock that you buy has risk. Nothing is safe. And as Bill used to say, all stocks are bad unless they go up in price.
Yes. All right. I love that. We should put that in a fortune cookie or something.
Right, exactly. And you know what? Speaking of which, just if you want to get a little bit better at kind of understanding the way markets work and making good decisions on stocks, I would highly recommend, this is a good time to just reread How to Make Money in Stocks, the 4th edition. Take a look at those first 100 charts in the first chapter. You're going to get a good sense of what these market performers, these market leaders look like, these true market leaders. Take a look at that. And then also read the chapter that is the M, market direction, because you'll see a number of these markets and what they look like at the bottom. So you kind of get a sense of, hey, we could go sideways. We could do this. You get those scenarios kind of in your brain. And I think a lot of times it's useful to use that change date feature on MarketSmith so you can do your analysis and say, hey, how would I have handled this day by day?
Yeah, exactly. And we're also getting a lot of questions right now about, well, how do I handle my retirement accounts, my mutual funds that I've been holding forever? If with all this doom and gloom, should I be, going to my bunker with those? So some really great words of advice from Bill as well on this different strategies than how we treat our individual stocks for those long-term mutual fund holdings as well.
Absolutely. Not to spoil the ending, but Bill has a completely different way in which he handles mutual funds and diversified growth funds in terms of dollar cost averaging those things that we would never do with individual stocks. But he's okay with doing that with mutual funds and your diversified growth funds because there's a belief in the overall system that we have here.
Compounding and
absolutely
diversification of the broad market instead of trying to buy and hold and average out on individual stocks. That's not what we're talking about with that.
Exactly, because some of these stocks, they never come back, and you just have to know that.
Exactly. So yes, read Bill's book. Also, we're talking about these things in depth on IBD Live every morning. Okay, let's take a look at some stocks, shall we? JPMorgan on this financial theme. Up big today, up over 6%. Some volume behind the move, trying to break a downtrend above the 21-day line for the first time in quite a while here for JPMorgan. And moving on, news today. I believe it was an analyst day, investor day for JPMorgan. So perhaps some, positive things said about, the state of the economy, but financial stocks moving on that news today.
Yeah, and certainly I think one of the things that came out of this that a lot of people were talking about is, just at their last earnings report, which was about a month ago, a little bit over a month ago, and you can see that right on the chart. They were saying, hey, we're going to miss targets. Things aren't looking great. But at this investor day, they kind of revised some of their guidance, said, hey, you know what? It looks like maybe we're on track. It's amazing what kind of difference a month makes. So I think that gave a little bit of hope for investors, a little bit of a rosier picture. But understand, look, 2022, that's still the earnings, that's still not a great year. It's not growth there. Next year's estimates, and these are estimates for 2022 and 2023, look a little bit better. But you see that these last few quarters, the fundamentals aren't necessarily great. You do have a strong move here today. It was up over 7% at one time, but you're still on an overall downtrend. This is a damaged stock. It's not as bad as a lot of these stocks. Like the Shopify's and Carvanas that are down 70, 80, 90%. But it's got a lot of damage. And so don't be too surprised if, like we've seen a number of times, this could get resistance right there at a 10-week line where it's at right now, and it could go down from here. So in some ways, this is almost looking like a potential short. So just be careful of that. One day does not mean that, hey, JPMorgan is in the clear.
Right. Yeah. Last time it ran up to the 10-week line, hit resistance and turned tail. So one of the shorting signals that we look at. So we'll be on watch for that too.
Yeah, absolutely.
All right. And Albemarle is at a key inflection point here. It looks like it's hitting resistance, Justin, as it has come off of lows in a pretty rapid, albeit volatile fashion until the last couple of sessions. Again, tightening up.
Yeah. And here's a big difference. Look at the numbers here. So the numbers were pretty negative and very strong this last quarter. You saw a big move as investors piled into this stock, because they were revaluing it, right? Hey, based on the numbers that we're seeing and the guidance that's being given, we're going to give this a different valuation. And what I like most is that it's holding that higher valuation. Sure, it did correct a little bit, came back below its 200-day line, but did find support at its 50-day line. And now you drew that line straight across, which is great, but let's go ahead and go even further back. And you can see that line right around 243, 244, where we're trading right now, goes back pretty far in terms of an area of resistance. You can even go back to September, October. It's not quite shown because of the data box, but that's kind of where that last cup was too. So you've got a long area of kind of a line in the sand here. And if we get above that, we might be able to have a further move here on Albemarle. This is definitely one of the areas of strength. You see a much better relative strength, even though this is off 16% from its high. Relative strength line already almost at new highs.
Yeah, and this could be interesting because, Justin, it seems like it's at the intersection of technologies because it's an EV play, but also that commodity angle as well. So,
Exactly.
and it's got the growthy elements on the fundamental side.
Yeah, as we talked about on the IBD Live today, when we were going over the industry group spreadsheet, chemical specialty, that's starting to get a little bit of traction in a lot of different areas. So Albemarle, of course, also has, they're one of the biggest lithium miners in the world, but they're not alone in terms of having kind of that diversification. SQM, which is also in the lithium mining, but it also does fertilizer. So there's a little bit of a little bit of both in there. These two strong areas, that's also moving very strongly. So you've got a lot of these lithium plays that are setting up again after taking a break for a while.
Mm-hmm. All right. Well, an area to watch, but to be sure, oil and gas stocks are still dominating, but can that continue? Well, we're keeping some names on our watch list, including Valeris, VAL, up over 5% today as it works on an ascending base.
Mm-hmm. First of all, I'm going to disclose that I do own some shares of this. And one of the things that I like about this base is ascending bases are one of those things when you see that in a rough market, it just kind of tells you the stock is trying to refuse to go down. It's trying to resist that downward pressure, like a beach ball that someone's holding under the water. All you need is kind of the right market, and that's gonna pop upwards, not pop in terms of a bubble or anything like that. But you do still have to be careful. This is getting support at its 10-week line. These pullbacks have been fairly mild. You can go ahead and scroll over there and you can see 15, 18, 18%. So this is one that's looking very interesting, setting up right now. I like that it was undercut. I mean, it was breaking out above a downtrend, but one thing I didn't like today, not much volume behind it, negative 47% versus average. So that's something I'd like to see more volume come into this. But oil and gas, this is in the drilling, and you see that's number 2 out of 197. If you look at the top groups right now, oil and gas is dominating. So rather than trying to pick the bottom on a lot of these stocks where, again, you don't know if they're going to ever come back, it's much better. We prefer to go with where the strength is. And right now, you can't argue with the fact that oil and gas is really dominating.
Exactly. Okay, so Justin, the shares, you picked those up today or you've been in this trade?
You know what? I had I've been in and out of this trade, so I picked some shares up. Actually, at the beginning of May, you see where it kind of broke that second pullback. I wrote it up a little bit, and then I got shaken out. Right in those 2 big days, I got shaken out of my shares, and so I am buying some of those shares back right here.
All right. Well, that's something that Bill O'Neill has been known to do, buying back after getting shaken out. All right, Justin. Well, thank you so much, and thanks to everyone for tuning in. We will, of course, be back with more tomorrow morning on IBD Live, so we very much hope you join us. So always love interacting with you all over there for more in-depth discussions on market conditions, trade ideas, portfolio management strategies, risk management strategies, psychology, lessons as well, historical precedents, you name it. Who knows what we will talk about tomorrow? It'll sure to be a good time. So we can't
definitely unscripted.
Yeah, and all unscripted. So no commercial breaks, no scripts. It's a lot of fun. So we hope
sometimes we have little breaks so that we can say goodbye to our kids in the morning as they go to school, but that's about it.
That's
right?
True. That's true. Or if our dog's barking at the mailman in my case. But anyway, join us, investors.com/IBD Live. We will see you there, and we will see you right back here tomorrow after the close.